Lululemon plunging today as its weak outlook overshadows strong fourth quarter results. The athletic apparel maker warning of slower sales as consumers pull back due to economic and inflation concerns. Joining us now is John Kernan, TD Cowen's Managing Director of Retail and Consumer Brands. Thank you so much for being here with us, John. Just curious, so just 2 days ago here, you reiterated your buy and your price target on the stock with some caution in your note. Does this result change anything for you on your call?
Our estimates didn't change materially post this earnings release. I think Q4 we knew was very good internationally. They had already pre-announced Q4 positively, and their gross margin was even up above where we thought it would be. It hit an all-time high of 60%. I think the stock's reaction today is more in line, is in reaction to the guidance for U.S., the implied guidance for U.S. comps, which is clearly negative as we go into Q1. So they've got to get that America's business turned around and comping positively.
What does this Lululemon guidance say about the state and the mindset of the consumer?
I think, the consumer clearly saw a big slowdown in February, and it's continued through early March. And I think when you look at, we came out of a very strong holiday, and I think everybody felt good about the consumer, but the headlines have changed. Consumer confidence has radically changed. And right now, the consumer is in a period of hesitation when it comes to discretionary spend.
Does Lululemon need to open up its model a little bit more? I mean, this is a brand that really struck such a chord on the D2C business that it changed the models for years of some of its biggest competitors. And then they were very selective about which gyms, which boutique experiences that they were going to partner and sell into as well and allow them to kind of co-brand. But all those things considered, they've never had this massive wholesale or retail type of partnership. Is that something that they should be considering?
We prefer for them to stick to DTC. There's some very select upscale premium wholesale distribution that they have. But again, what makes the magic of Lululemon is their in-store experience. They're directly controlling their brand. And I think that's been an advantage for them over time, both in store and online. They've been increasing marketing recently. It was up 50 basis points as a percent of sales. This isn't a company that spends a tremendous amount on marketing compared to some of the peers, but that's an item we're watching to see if it rises even further.
John, just curious, when you are doing your modeling on a company like this, how do you possibly factor in the impact of the tariff policy coming from the White House right now? How are you getting clarity on how to change your models off that?
It's very difficult for us. It's very difficult for the CFO. They did include some tariffs embedded for Mexico and Canada within their guidance, but they didn't talk to increase tariffs out of potentially Vietnam. And that's a big announcement coming next week is, will we see tariffs out of Vietnam? We don't know. But that is a region with heavy sourcing exposure for all of these companies, in particular Lululemon. So if we were to see some type of tariff on goods coming out of Vietnam in the US, you'd have to see some pretty significant price adjustments across retail. So the consumer is not going to like that.
As we're talking about the broader geopolitical implications and how that also permeates into the consumer mindset, what are you watching within the Asia Pacific region, especially knowing how core of a growth region China is for this business?
I think China's critical for the narrative. China was 42% of Lululemon's total 2024 sales growth. It's going to be even, based on the initial guide they gave, it's going to be even at least 50% of the incremental sales growth this year for the total company. So there's some investors that are hesitant to pay a high multiple for that. They want to see the Americas business start comping positively again. Americas is in a much more competitive environment than China, so to speak. There's some new upstart competitors that are making that market difficult. But China and rest of the world are very important to this financial model and the growth right now. And I think investors are hesitant to pay a very high multiple for China-based growth.
So just to put a bow on this, the stock continues to move to the downside while we're talking here. Do you think investors are wrong that this is an overreaction, or are we going to be asking you to come back on our show when you lower your price target next week?
Well, we're certainly not going to be lowering our price target next week because our earnings estimates aren't going to change. The valuation of the stock is as at a trough level. It's sub 20 times 2025 earnings. It's sub 10 times EV to EBITDA. The whole sector is under tremendous sentiment pressure right now, and valuations are contracting. You can see it across all the peers, and it's related to one, the unease over the direction of the U.S. consumer, two, the tariff situation and global trade policy. And so I think ultimately this will be a good buying opportunity. Our price target's a 12-month price target, but earnings estimates didn't really change last night. It was just the perception of growth. China's driving more growth. U.S. is still negative. Going to see some change in that.
All right. John, you've reminded me I need to go hit the We Made Too Much rack in the back of one of my local Lululemon stores. Appreciate it.
Good luck.
Thank you.